Good morning, everybody. Welcome to the Options Trading for Income Weekly Update with Locke in Your Success. Before we get going, we would like to remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, be aware that the risk of loss in trading options is substantial, and be aware of all your risks prior to placing any trades. And note that we are using hypothetical computer simulated results and or trades within the presentation that are believed to be as accurately represented as possible. However, live results may vary. This week is a pre-recorded session, and it's not your regular Monday morning webinars because we are doing the Advanced Position Management Squared seminar on Monday and Tuesday, and this is going to be a lot of fun. We have a lot of great traders from all around the world coming to meet, where we're going to get together and discuss advanced position management, advanced personal management. It's going to be a lot of fun, and that program is going to be coming out hopefully in June. So that'll be great. Moving forward, if you haven't done so, please visit our website, check out our current programs, the Super Simple Spreads. We have the M3, the Bearish Butterfly, the Rock, the M21. We also have multiple one-on-one coaching options. Become part of our inner circle by joining our mailing list, get your free report, the 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. And of course, stay tuned for all our programs currently under development. We've always continuing to do the best we can to provide you with the very best in education with the options market. And like I said, this seminar, as we mentioned earlier, is going to be taped Monday and Tuesday, so that's going to be great. We have a Trading Triangle book coming out in the fall. We have an online Trading Triangle program hopefully done by the spring, and then we'll have some other neat stuff coming for you. If you'd like to contact us, here's our information. Moving forward, we'll just quickly go over what's going on in the markets. On the last update, last Monday, we were thinking that if we look at the SPX, that the market was probably going to back off and try and stay in a more of a sideways range. Well, the market did back off, came right back up to all-time highs. We haven't breached intraday all-time highs, but we did have some closing all-time highs in the SPX, which is a little bit on the bullish side. And initially last week, I was thinking we're going to stay in a sideways range. This I would not consider a breakout, but I do consider it a little bit bullish, so not so sure anymore. We'll have to see where this goes. As far as the other indices go, I mean, they're certainly not broken out yet. We have the Dow, which is coming into its all-time highs. We have the NASDAQ, who hasn't even reached that point at this point. It is at a short-term resistance area, though, right up in here. And if we come back to the Russell, we're also at a short-term resistance area. So we're kind of in the same place we were last week, where the markets are likely to come down, but the patterns we're looking at here seem a little more on the bullish side to me than the bearish side. So I'm not so confident we're going to stay sideways anymore. We're just going to have to wait and see how things work out. But and that'll give us a clear indication. If we get a clear breakout in the SPX, very likely we're coming back up to 1280 here in the Russell. If not, then we're likely to break down to at least 1210, possibly down to the 1190 area. So that's what I'm thinking going forward here. As far as our trades, we did have 2 trades open for expiration week. It was not the best situation where we had the large move up on Thursday. It kind of hurt us a little bit. If we take a look here at our May M3, which is one of the trades we had open, this trade here on Monday got 3 1220 1230 put verticals. So we did 3 1220 1230 put verticals. If I go back a half an hour, you'll notice we had 6 1220s and we rolled them up to 1230. And this is what the position looked like as of close of day on Monday. Then we did nothing on Tuesday. However, on Wednesday, we were 2 negative delta at this point, and we needed to make an adjustment. So what I ended up doing here, I'll show you as I move forward, is I ended up doing two 1210, 1240, 1250 broken wing butterflies. I just wanted to shift my tent up a little bit, get my delta down, and I still kept myself at pretty much my negative delta limit here. If we take a look at the position, it's like this. Now, had the market stayed calm, had it been relatively flat or kind of migrated back a little bit into the day yesterday, it would have been a really nice trade. We would have made out really well. But of course, we got the up move that was fairly aggressive on Thursday. So, being expiration day, I do start trading intraday. On that particular day, especially when I have a theta vega problem, which was the case here. If you go to 1030, I actually did 8 more of those same butterflies. The 1210, 1240, 1250s, and ended up in this position here. I also closed out some of the lower spreads by doing some 1160, 1220 verticals. I closed out the lower side because there was really no value, no point in keeping it there. I ended up in a position that looks like this. So essentially I have 7 vertical spreads to the downside. I have 10 vertical spreads that are bearish to the upside. I have the call on. And this gives me a position that looks like this. So still very similar to a condor-ish type of position here. As the market continued to go up during the day, what I did is I just started pulling off whole spreads. So if we go to 11 o'clock, you can see I sold some 1220, 1250 verticals to level off my delta. Ended up in a position like this. I'm just kind of rotating the tent off to its side. And then at 1300, I did a 1230, 1250 vertical. At 1230, 1250 as the market continued to climb. Ended up in this position here. And then really no other adjustments at that point. That was pretty much the top of the market. And we held this till the end of the day. Ended up being able to close this for a profit of, let's see, I have $1,947, even though this was showing $24.93 at the time. It wasn't quite that high. So I ended up at $1,947 for a 3.9% planned capital profit on this trade. And like I said, this was closed after this here. So that was the M3 trade for the month on May. It was kind of a pain in the neck. We're kind of treading water, breaking even all month, but ended up a little bit profitable, so not bad there. If we take a look at the rock trade, this was a problematic month for this as well. Let's take a look back on Monday. So here I am positive vega, and I've more or less officially outrun what we call outrun an M3 trade by the end of the day on Monday, because the market was up and I'm experiencing a positive vega issue. If we're in rock position, we are typically going to go ahead back into rock position. Now, being very close to expiration, we have limitations on exactly where we can position our options, but you'll see I went from this position here back into a rock type of position. And the moves to do that were essentially 10, 1150, 1190, 1220 broken wing butterflies, buying 1230, 1270 put verticals, 10 of those. I bought 1210, 1250 call verticals, 6 of those, and I left the call. So what that did is it put us in, we'll show you the new position that put us into. Position looks like this. So essentially I have a butterfly up here. I rolled the puts up pretty high to protect against the downside. This close to expiration didn't cost me much money. I didn't have, normally in a rock trade, if I'm at 1220, I would have my shorts at 1260. I did not have time value at 1260. So in this particular case, what we do with this is we do 1210, 1250 verticals. And that's going to give us a position that looks very much like a rock trade, just like this. So that is the position we were in as of Thursday. We were drawn down, looks like we're in the range of about $1,700, which is pretty much where we were sitting on Monday, right? From there, we sat in this position on Wednesday. On Thursday, at 10:30 in the morning. Again, we were experiencing an up market. So at 10:30 in the morning, what I ended up doing here on the rock trade is at 10:30, I did 3, 12, 20, 12, 40 verticals on the call side. And I don't know why it's not showing that, but oh, that's because I'm on the wrong day. Let's go to 10:30. I did 3, 12, 20, 12, 40 verticals, and I'm sitting in this position here. Let's just get the value back in our call so we get an idea of our profit and loss. At this point, we're up about $1,900, and this is what the position looks like here. So all I did is those verticals. I chose this vertical because, again, my time value was not any. In other words, I didn't have to buy any more time value in order to get into this 1220, and realistically, there was nothing to sell at 1250. So I went in here and I sold the 1240s. A little bit later in the day, let's see, for time, it was actually 1230. I actually did roll these 1240s to 1250 because the market came up and I actually had time value there. So if we run to 1230, I rolled those 3 1240s up to 1250. That gave us a position that looked like this. You can see how this is kind of pushing into a rock type of a trade. And then, let's see, I believe that was it. Oh, I also bought a call vertical, a 1220, 1250 call vertical, so that we had actually 10 shorts up here at the 1250 level. And that was the end of our adjustments. So if we come to the end of the day, we did end up closing this trade out at about a $1,200 profit. Let's see, the actual profit on this trade ended up being, the way we closed it, slightly higher than this. It was $16.49, and for 3.3% planned capital. Not the best trade, but I'm very happy with that. I mean, I thought we were going to take a 5% loss on this, but the way the market moved, it happened to just pop us back into a rock position by guidelines, and it actually ended up making out. So, you know, like I said, it's one of those months where the market movement was just a little bit weird. So let's go to our June trades because we no longer have any May trades on. So let's just shoot over them. I'll just show you how they are, primarily because there were no adjustments. So if we take a look at our Bearish Butterfly for June, this trade is up $7,200. We are 1/3 entered, and we're sitting right here, right in the middle of the position. So this looks really nice, especially if the market remains relatively flat. Realistically, trading this live, I'm doing an M3 conversion to the upside in this trade. We are going to just follow the guidelines and do what the guidelines tell us. But you know, just let you know, full disclosure going forward, that's what I'm thinking on this particular trade at this point. Realistically, if I am up $10,000 during the week next week, and I'm only 1/3 in, generally that's a really good trade. So I'll pull the position. That's 100% of my actual investment risk capital, which is very nice. 20% of my planned capital, nice easy trade, no problem. So if this thing drifts back, next week we may very well be pulling this off at around a $10,000 profit. If the market goes up, we will just continue with whatever the Bearish Butterfly guidelines are. If we stay under 1280, in other words, we run up to 1280 and stay under there, that'll be a very good trade for the month actually. If you know, it really takes off, it could be problematic, which is why I would put this in an M3 configuration going forward if the market continues to climb. But this is the way that trade sits, so going very, very well. Our M3 trade for June is pretty much still at break even. We're about $436. We are starting to encounter a gamma trend problem. It's kind of borderline on whether I should actually do anything with this or not. I just chose to leave it. We'll see what happens Monday and Tuesday. If we get a breakout, then we'll make our normal adjustments. If it comes back, then we'll probably still end up making up adjustments unless it comes back a lot. But that had no adjustments this week, and nor did the V Condor. which is here. It's up about $300 and looking like this. So hopefully we don't sit here over the V for an extended period of time, or at least into expiration. If we get a decent up move here, then if we get the breakout and we grind up, this will actually be a very, very good trade for the month. Even if we come down and we kind of hold this range down here, we'll probably be decent. If we stay here, it's going to be possibly a loss for the month. So we'll see what happens. But as of right now, everything is going fine. So this is results week. So if we take a look at how we're doing thus far for the year, we closed the Bearish Butterfly for May at a reduced profit target 21 days to expiration of 11.8% of our planned capital. That was actually a nice simple trade as well. So we have thus far, we have 4 winning months, 1 losing month. The losing month wasn't bad. The winning months have not been anywhere near our high profit target numbers, but we are doing very, very well for the year. So about 44.1%. On our M3 trade, again, we've had wins every month here. They've been pretty good. We've had a really good January, a really good March. February was kind of average, April was kind of average, and May was a little bit below average. But decent year for that so far. That comes out at 33% for the year. That's slightly ahead of projections. We have a rock trade that has had 9.4, 21.1, which would be an excellent month. We had another 10%, which is more average. We have a 19.2, which is again another excellent month. So it's been actually an excellent year for that thus far. Almost took a small loss this month. Even if we did, it still would have been doing very well. But overall, we are 64.8% for the year. So again, that's ahead of what I would expect. So very nice. It's been a pretty good year so far. And the V Condor is also ahead of what we would expect. So 6.1, we got a 9.3, a 12.6, which is much better than usual. We have a 7.2 and a 2.5. So this is also ahead of what I would expect for the year. So very good year so far, and we'll see how June makes out and see how that is going forward. So that's all I have for now. Like I said, I'm going to be focused Monday and Tuesday on the 8 p.m. seminar. You might get some strange adjustments in here in the June trades for for Monday and Tuesday, because I'm going to be busy and not going to be able to manage them. So I may do something temporary if the market does anything too crazy. But other than that, we'll get right back on the guidelines on Wednesday, and we'll see you probably, let's see. I should talk about this as well. We're going to need to do something about the webinar from Monday, because the Monday is a Memorial Day holiday here in the US. So keep an eye on your email. I will send something out when I decide what to do with that. So have a great week, everybody. And for those of you coming to the 8 p.m. seminar, I'm looking forward to seeing you. Goodbye.